All right, so I am a dad. I think most people know that. I love a good dad joke. So are you guys ready to excel? This is our first page of our spreadsheet. It looks like a lot, so we're gonna take it bite by bite. Same way you eat an elephant, one bite at a time, and you'll see that it's really not too much that we're asking for you. We built this software after trying some third-party software the first year, and it was a mess. So we built our own to make it as easy as possible for you to fill out this spreadsheet so that we can give you accurate forms without making you spend a lifetime becoming an expert in what these forms are. You as the employer, you as the broker, don't need to know any codes to do these. We calculate all the codes, we calculate affordability. You tell us the inputs, we give you the outputs. So on this first page, this is our employer or company info page. At the top of it, you see control group member companies. Here's where we're gonna list all of the employers in the control group. And we're looking for their name, their tax ID, their address, a phone number, and a point of contact. This is all in Excel, so it's really easy to manipulate, really easy to add or remove columns if you need to. So control group, every company in the control group. Next, we're looking to identify classes. Classes does not match up necessarily with how the employer defines classes. The way we define classes in here is based on the lowest price that an employee would pay for single coverage for the lowest price plan. So if you've got everybody pays the same price for the lowest price plan, no matter who they are, you're not breaking it up based on income or location. Let's say everybody pays $110 a month for single plan on the lowest cost option, we would have one class. We need to know if there's a union group in there because they have different codes as well. So we're looking for the class. You're just gonna come up with a name or a letter. This is gonna be looked at by a person. So we need some sort of description of the class. I would say we're now coming in on 6 years of doing this. Almost all of our classes go in as A. You can put them in as whatever you want, but most of them go in as A. Class A, Class B, Class C. The waiting period is going to be a number of days, number of months. Just let us know what it is. So 90 is the most common. That's what the Affordable Care Act says the max is. That's what people use. And then the entry date. We're looking for immediate or first of the month. So if it's 90 days, it has to be immediate. But if it's 30 or 60, it might be first of the month. Then we're looking for what kind of offer was made to the employee. What kind of offer was made to the spouse? What kind of offer was made to the child? And the options here are laid out above it. You've got minimum essential coverage, which is basically if you've got a plan that covers a physical a year and that's it, or maybe a couple of visits a year but nothing else, that would be MEC plan. Minimum value is going to be your traditional coverage. This is going to be a qualified group health plan. These are the plans that cost hundreds of dollars a month for a single. On the low end, you could be paying up to $1,000 a month for a single, in some plans, maybe more. So this is real insurance that's expected to cover 60% of all claims on an actuarial basis. Then we've got individual coverage HRAs, which is when the employer gives the employee money to go buy an individual plan on an exchange. We're going to talk about a little bit of that in a moment. And then there's no offer. So we're going to put that down for each, the employee, the spouse, and the child. If you've got a traditional plan, it's going to be MV all the way across the way. Minimum value, if they're enrolled in a Horizon plan or an Aetna plan, Cigna, I'm not going to name all the carriers, I'm not playing favorites, but if they're enrolled in a traditional group plan, it's going to be MV for everybody in most cases. The employee contribution, there's a couple of windows in here. These columns, it says January to May and June to December. Those are not the actual dates we need. What we need are the dates if there were any changes. So this is what the lowest price plan would cost an employee in that class for employee only coverage. If you're a mid-year plan and you've got a mid-year renewal and your mid-year change happens for your contributions, this is where you would change those dates. So in this instance, this looks like a June 1st plan year where their increase happens on June 1st. So they would have one contribution from January to May and one contribution from June to December. If your plan is an April 1st plan year, you would put it to 1/1 to 3/31 and 4/1 to 12/31. We need to capture monthly contributions for the entire year of 2021 so that we can put it down and calculate affordability for these employees. And then the last thing on the first page of the spreadsheet is the total employee count by company. And so this is everybody that had a pulse that got a paycheck in a given month. So each employee gets counted as one. We don't worry about fractions. There's no such thing as a full-time equivalent. Every employee, if they worked 1 hour, 1 minute, 100 hours, they all get counted as one, and we list them by month, by employer. So we're going to go down by employer and list our EINs across the way. So if you've got multiple groups, you just keep going and you work your way down and tell us how many there are. We're going to calculate the full-time amounts based upon what you tell us on the next page, but you're going to tell us the total amount. And that's going to be something you can usually get right out of payroll by finding the number of people that got paid that month. The next page is the employee info page. And again, this looks like a whole lot, but we're going to eat the elephant one bite at a time. It's really not too much. We do need one of these for each company, or if you want to do it all on one page, that's okay. You just add a column and you tell us which company the people work for. We'll break it out into separate pages for each employer after we go. So this big long list that you see here, really straightforward stuff. We're looking for the first chunk of it's going to come from payroll. We're looking for the first, middle, last, Social Security, date of birth for your employees, their address, city, state, zip. We're just looking for their basic demographic information. This will come right out of payroll. And this is going to be for all of your full-time employees that were entitled to an offer of coverage. What does that mean? It means that they worked longer than your waiting period, and it means that they either were in a stability period if they were a variable hour employee. And if you don't know what that is, happy to talk through that offline. And then it would also be anybody who's just scheduled to work full-time on a regular basis. So we need their name, social, their date of birth if it's an age-banded plan, or if we have an individual coverage HRA and ICRA, and their address. If you have an individual coverage HRA, we're going to calculate if that was affordable for the employee. And what does that mean? It means we need to know what the plan would cost the employee if they had gone to the marketplace. We're going to figure out what the second lowest cost silver plan cost that employee. That's the affordability threshold. We're going to subtract from whatever that premium is based on the age banded rate, and we're going to determine if that difference between what the exchange charged the employee and what you paid the employee is within that affordability threshold for the employee. So we need to know the rating zip code that was used. It's either going to be the employee's primary residence or their work location. And then we need to know if it's their residence or their work location. So you're going to give us a zip code, and then you're going to give us a description of that. You're just going to tell us what it is. If you didn't have an ICRA, you can ignore these fields and leave them blank. Next, we need to know employees' dates of hire and termination. Real straightforward. Generally, 2 windows is the most anybody will need. If you need more than hire, termination, rehire, and second termination, let us know. We'll work with you on that. But this is only as it relates to 2021. So if you have an employee who's been on and off over the past 10 years, we only really care about how it works for 2021. So if you have a 90-day waiting period, anything before really 91 days before 2021 doesn't apply. So we're looking for 2021 employment windows. Then we're looking for the employee's class that you told us on the first page. So for almost all of our employers, this ends up being A as well. And then we're looking for how much the employee made so we can calculate affordability. This comes out of payroll as well. So we need a dollar amount in the base compensation column. And then you need to tell us what it is in the compensation type column. So and the reason for that is we might see a number that says 3,000. And I don't know if that's a W-2. I don't know if that's a monthly salary or some other combination. I'm not sure what it is, so I just need to know what it is. And then finally, for the employee, we're looking for their coverage info, and if you have any notes to tell us, if you've got something abnormal with a specific employee, you want to make sure we know, there's a text column. So we're looking for this from your carrier. Your carrier is going to be where you're going to go get this information, which is going to be the windows of coverage for the employee during the year. So were they enrolled from and to? Was it all year? Was there a break in the middle of the year? If it was all year, you're just going to use the first 2 columns. If there was a break in the middle and then they came back on the plan at the end of the year, let's say there was a layoff or they quit and ultimately regretted it and came back to work, you would use both windows. But for almost everybody, you're going to put in the dates in the first 2 columns, and the second 2 columns will be left blank. We're only going to need coverage dates for employees who had coverage. So if they did not enroll, but they were eligible, this will be blank. For those who enrolled, if they were a full year employee and a continuing employee, this will say that coverage was from 1/1/2021 to 12/31/2021. If they were a mid-year hire, maybe they came on in June, it might say June 15th, 2021 to December 31st. Same thing for a mid-year termination, maybe January 1st to June 15th. And then again, if they did not have coverage, it would be left blank, and we'll calculate that as a waiver. And the last page only applies to self-funded employers, and this is so that we can put dependent information onto the 1095-C, and that satisfies your B form requirement as well. If you are self-funded, we will file this to the state of New Jersey for you. This dependent info, it's a smaller sheet, but we're still going to take it bite by bite. So this is only for dependents and only if you were self-funded at any point in the year. We need to know the employee's social security number, which is for the employee that the dependent is associated with. So the employee social goes in the first column. That's how we know who to track this dependent back to. Then we need the dependent's first name, middle initial, and last name. Pretty straightforward. This will come right off of a carrier report. You should have this. Ask your health insurance carrier for what's called a coverage detail report. And no matter who the carrier is, those are almost always the magic words to get the right information for self-funded plan enrollment info. After name, we're looking for some more identification for this dependent. The employee contact type, there's two options, spouse or dependent. This really doesn't matter except for aesthetic purposes. If you put spouse, we will list it from top to bottom as employee, then spouse, then dependent children. If you don't indicate everything, we'll just put everybody in as a dependent. The aesthetic difference is that the spouse may end up at the bottom of the list or somewhere in the middle of it. So some people have a preference to see it listed as employee, then spouse, then children. If that matters, you can go ahead and put in spouse for the spouses. What is not optional though, is we need a social security number or a date of birth for every dependent. The social security number is the preferred method, but you will find as you open up that coverage detail report that maybe you don't have a spouse's or a child's social security number. You're going to see all of a sudden that you've got claimants on your plan that are being paid out to 0000000. So we need a date of birth if we don't have that social security number. And then just like on the employee info page, we're looking for coverage windows for these dependents. The first date in the year and the last date in the year that they were covered. If there was a break in coverage, the first day of the first window to the last day of the first window, then the first day of the second window, and the last day of the second window. So that in a nutshell is the entire spreadsheet process.